Hello, this is the Unemployed Value Degen, and welcome to another episode of What Am I Buying This Week? We had quite an eventful time in the markets with Jerome Powell's Jackson Hole speech. And I'll zoom in a little bit. Let me go to 3 months. So for the last 2 weeks, well, the second half of 2 weeks ago and then last week, things were selling off a little bit. And then after Jerome Powell came out in Jackson Hole and reassured the market, although it's he is a lawyer by training, he can talk out of both sides of his mouth. It's not entirely clear that he supports a rate cut in September, but the market's interpreting it that way. And the sell-off from that started 2 weeks ago has now completely retraced in the S&P 500. And two things about that. One is that with the dollar index weakening, our dollar index since January has gone from 110 down to 97. Some people are predicting it to go way down to 90 or even 80. They don't have a data point on this particular chart of what it looks like when the dollar goes to 80. But that's an extreme call that some people are making. And I don't know if it's taking into account, so Treasury Secretary Bessent is pushing for using stable coins to be a huge demand for Treasury bills. So to me, it's not clear that we will have a dollar that week, but there are definitely some people out there predicting it. But with the dollar sell-off from January, this is the S&P 500 priced in euros, which is still well down from the peak, because this is the April dip, and this is the peak before April. So if you price it in dollars, go back out to the 1 year. If you price it in dollars, we're above that March peak. And then when you price it in euros, we're a good bit below it. And then, some people are making a big deal about how inflationary this is going to be. I look at it slightly optimistically. The S&P 500 has so much revenue coming in from overseas that should boost earnings, denominated in dollar terms. So it's, I don't see it as being all that terrible, because what that means is the S&P 500 still has room to rise. And then the second pattern that was really interesting, so the S&P 500 pretty much retraced that whole gap that started 2 weeks ago. But the NASDAQ did not. Right, the NASDAQ is still well below the sell-off that started 2 weeks ago. And it's a little bit too early to call victory of some great rotation into value names, because for the last 2 years, there have been a couple of attempts at a rotation into value. And then, NVIDIA comes out with earnings and it's back on to large cap tech. But it might be different this time, because the last 2 times it looked like there was a rotation into small cap value, it was in January. So you have tax loss harvesting, from about this time of year all the way to December. Some funds have the end of their fiscal year in October, so they tax loss harvest in August and September. Most retail investors, individuals, they have their tax loss harvesting in November and December. They sell it, they have to wait 30 days before they buy it back. And all of that buying back of small cap value stocks had small cap values outperforming in January for the last couple of years. We said, okay, here's the rotation, and then February came along and there was no rotation. But to have the, so the S&P 500, again, retrace that gap. The NASDAQ, right, the NASDAQ did not. But now look at the Russell 2000, right? It's just a moonshot. I think it was up, actually I have it right here. So in 1 day, small value was up 3.5%, and large growth was up 1.6%, give or take. So that's not guaranteed, but this could really be the start of something. And I had a post last week called "Green Stocks on Red Days," and I don't think people that saw the name understood why I think that's so important. If something is green when the market is selling off, what that means is a lot of people are using ETFs. So if you're investing using ETFs, one stock can't really buck the trend. To buck the trend, there has to be some large programmatic